Today we're going to be talking about a stock that many people are saying has the potential to double. We're going to be talking about whether Draftkings stock has the potential to double and whether it is a good investment in 2020. I'm going to be sharing my opinion on the stock. We're also going to be taking a look at the pros of investing in Draftkings. We're going to be taking a look at whether it is a good growth opportunity, a really good investment in my opinion, or whether it's a stock that's very overvalued. If you like this video, make sure to drop a like and subscribe down below, and let's get right into the video. So DraftKings is the B2C business. They're business to consumer business, and they provide sports gambling services to consumers. They provide a platform where consumers can choose to gamble their money if they wish. It's a sports betting service, and they recently IPO'd. They recently just became a publicly traded company on the stock market. April 24th was their first day where they were trading publicly on the stock market, and ever since then, it's gone up about 50%, which is absolutely huge. They've gone up a lot ever since they became a publicly traded company. Many investors were able to get shares of it through privately investing in the company. And many people were able to buy shares in this stock at a price as low as $10 per share. And now the stock is at $30 per share. So for many investors, the stock has tripled their investment in such a quick amount of time. In the span of a year, many people were able to triple the value of their investment, which is really ridiculous. And this IPO was no normal IPO at all. When the company became a publicly traded company, they actually merged with another company called SB Tech. SB Tech is in the same industry as DraftKings. They're a sports gambling company. But SB Tech, what they do is that they provide service for other sports gambling companies. They take care of customer relations and customer service on behalf of many sports betting services. They provide risk management and analytics services for sports betting companies. SB Tech makes sure that no fraud is going on other sports betting platforms. So when DraftKings IPO'd, they merged with SB Tech, which is a business-to-business service for other sports betting services, and they merged with DraftKings. This is a very good thing for DraftKings and their overall business model. Before they actually merged, DraftKings would have to hire a third party to perform these services for them. And this would actually cost them a lot of money because they have to pay another person, a third party, to perform these services. But now, since they have merged with SB Tech, they can actually have these services performed from an internal company. They don't have to go out and find someone to perform the services for them. This can actually make their profit margins a lot higher because they're getting rid of a very big cost by internalizing these services. And also, this adds a lot of diversification to their business. SB Tech is a company that does a lot of their business in foreign countries and especially in Europe, while DraftKings is a company that does a lot of their business in the United States. So by having this merger take place, they're diversifying their revenue streams across many more countries, which is very helpful and it helps mitigate the risk. And they're also diversifying the services that they're involved in, which also mitigates some of the risk with this stock by diversifying their revenue streams, which is a very good thing about the merger that took place. And DraftKings is a stock that many people have a very bullish view on over the long term. For example, Disney purchased over 18.2 million shares of DraftKings stock after the merger with SB Tech, which is an absolutely huge investment. This is no small investment. Disney really does believe in the long-term potential of DraftKings. Also, 21st Century Fox invested in DraftKings back in 2015. They've been an investor for over 5 years. It just really shows that some large companies have a very bullish thesis over the long term in these stocks. They believe in the long-term potential of DraftKings, which is a really good sign for us. And it shows that there's a lot of people who have a lot of hope for this company. And DraftKings definitely has a lot of growth potential because the legalization of sports betting is really just around the corner. Right now, about 20 states have already legalized sports betting. So almost half the states have legalized it already. And in 2020, 3 more states are expected to legalize sports gambling, which is pretty good. It's going to allow them to access more revenue streams because they're going to be able to sell their services in new states. But what is even better is their long-term outlook. By 2021, 16 states are additionally expected to legalize sports gambling, which is going to help boost their revenue by a lot. That's an additional 16 states that can almost double their revenue from the United States. So their business can realistically double just because sports gambling is getting legalized. And it's also really good for Draftkings because the federal government cannot make sports gambling illegal. They used to have a law which essentially made sports gambling illegal. However, the Supreme Court ruled 2 years ago that this law actually violates the Constitution. States have the right to decide whether they want to legalize or prohibit sports gambling within their territories. So it shows that states have control over whether they want to legalize sports gambling or not. And since many states are expected to legalize sports gambling, the business can realistically double just from the US market. The US market can realistically double for DraftKings, which is absolutely phenomenal. And keep in mind, this is actually going to be pushed for even more due to current events in the world right now. Right now, states don't have a lot of money. They are running out of cash really quickly. One reason is due to the unemployment insurance. A lot of people are unemployed right now, so they have to pay out a lot of money in unemployment insurance. And also, they're losing a lot of tax revenue just because the economy is slowing down. What this means is that states are going to be looking for new sources of tax revenue. And some states are thinking about legalizing sports gambling just so they can tax it. Realistically, many states are going to actually be pushing for sports gambling to become legalized because it's going to provide an additional revenue stream for them, which can also help DraftKings' business because there's going to be more people who can really participate and use their service, which is just such a good thing for their business model. And the hope does not stop there. According to this article on Bloomberg, in the second paragraph, a Morgan Stanley analyst sees a realistic bull case where the United States sports betting and iGaming market reaches $22 billion compared to the current base expectations of $12.5 billion. So they are expecting that the sports gambling market will double more than what the expectation is. That's a huge increase. And if that does really occur, DraftKings is going to be able to make so much money. If the market grows, they're going to be able to grow as well because they represent such a large percentage of the market. I think they have about 30% market share right now. So if the market is growing a lot, they're going to be able to dominate and take a huge portion of that pie. According to that same analyst, if that does occur, the share price of that stock can reach $75 per share. Right now, it's at $30 per share. So he thinks that it's possible that the stock can more than double its valuation right now, which is absolutely insane. He's predicting that the stock can realistically double, which I think is honestly a little bit too much of an expectation to expect from the stock. But it just shows that there's a lot of potential in this company. And if a lot of the growth in the e-gaming market does occur, then the stock can realistically increase by a lot. Like, you're talking about phenomenal gains. The esports market has tons of growth ahead of it, according to so many people. In general, this industry is just going to blow up. According to Business Insider, it could grow by up to 79% by 2023 from a base of 2017. That's phenomenal industry growth. And if the industry in general is growing by a lot, the betting and gambling in the industry is also going to grow. So there's tons of growth ahead in the industry for DraftKings. And since they own such a large market share, they can take a lot of that growth. But I feel like there's going to be some challenges for DraftKings in the future, and especially in acquiring new customers in the esports market. So first off, a majority of people who are interested in esports and e-gaming are Gen Zers and millennials. People who are young and fit that demographic tend to be engaged and tend to watch esports and e-gaming tournaments. But the problem is, the very people who are interested in esports and e-gaming, the very people who watch e-tournaments and Fortnite tournaments and all that, they are the least susceptible to engaging in gambling. According to the Yale Tribune, they're half as likely to engage in gambling than people of other demographics. So the very people who are interested in e-gaming and esports are much less likely to gamble than a lot of other people in other age demographics. So there's a little bit of a problem there. It's going to be hard for the company DraftKings to acquire new customers when the people who are interested in e-gaming are not interested in gambling. I'm not saying they're not going to have a lot of growth ahead of them. There's tons of growth ahead for this company, but it just can be a little bit challenging to acquire as much growth as the analysts are expecting, because the people who are interested in this industry are not interested in gambling. The people who like esports are not interested in gambling. So there's just a small challenge ahead of DraftKings, but I don't think this is any major thing that can prevent their growth, because there's just so much growth ahead of them in general that this one small setback can't hurt them that much at all. You're also seeing some small setbacks with the stock in the short term. Due to the current state of the world right now and current events going on, the NHL, NBA, and all sports leagues have canceled their games. That means people can't bet on their games. How do you bet on who's going to win a game if the game doesn't actually take place? So this is a problem for DraftKings, because people are not going to be able to really bet on any team on their platform. So in the short term, since sports leagues are closed and not operating right now, they're going to face a huge decline in revenue. However, there's a lot of good side with the stock. Definitely within a year, the sports industry is going to start opening up again. Maybe not to people watching their games necessarily, but games are going to be playing most likely. I'm pretty certain about that. People in the NBA and the NFL are going to be playing games and at least broadcasting it, in my opinion. That means that people can still bet on who's going to win the game. This is going to allow DraftKings to continue to get revenue fairly quickly as the economy is starting to reopen again. So DraftKings does not have really any major setbacks with their overall business model. But still, it's still not a perfect situation for DraftKings, especially considering that it's an IPO. IPOs are known for not being too successful of an investment. You see something like Beyond Meat, right, which recently IPO'd. They shot up right when they IPO'd and they came crashing back down. I mean, you just see this pattern with a lot of stocks. They tend to go up a lot after their IPO, then they come crashing back down. So just in general with IPOs, they tend to come down below the price they're actually initially offered at. So I mean, if you're thinking about investing in this stock, it just might be smarter to wait for the stock price to come down, because it just does happen with a lot of companies that recently IPO. You can often find a lot of these IPO companies come below the stock price that they are initially offered at. So if you're just thinking about investing in it, it just might be smarter to wait for the stock price to come down a bit. You don't want to buy at the high and hope that it'll go higher. You want to buy at the low and sell at the high. You don't want to buy high and sell a little higher. You want to buy low and sell high. And their financial history isn't the best either. If you take a look at their revenue and earnings for 2017, 2018, and 2019, you see a pretty good trend with their revenue. Their revenue is consistently growing, and that's a perfect situation. That's exactly what we want to see. But their earnings are doing the exact opposite. They're losing more money each year, and they're not even positive. They're not even getting closer to making a positive amount of earnings. They're not making a profit. They're actually losing money consistently each year, and they're losing more money each year, which is a very bad sign for the company itself. And I think it's going to take at least another 3 years for the company to become profitable. And here's why. According to the company itself, when a new state legalizes sports gambling, they have to spend a bunch of money in marketing in that state. They have to spend millions and millions of dollars in marketing expenses so that they can acquire customers in that state. And they said that on average it takes about 2 years for a single state to become profitable. And as states are currently legalizing sports gambling, they're going to have huge marketing expenses in these new states. And if each state takes about 2 years to become profitable, it can take about 2 to 3 years for the actual company to become profitable in general. So just right now to invest in it, I think it's a little too early. I think it would be smarter to wait until the company is closer to profitability so that we can assess how profitable the company is going to be, so that you can actually assess what's a good price to pay for the company, what's a good stock price to invest in. It's better to wait until the company is making a profit so that you can assess what's a good price to actually pay for access to that profit. It's just much smarter to wait until the situation is more clear, crystal clear, and how much they're going to be making. And it's just smarter, in my opinion, to wait until they're closer to profitability. But overall, if you do invest in this stock, you'll, over the long term, you'll likely make a lot of money because it's very realistic that the company can become profitable. And once it does become profitable, you're likely going to see the stock price literally explode, similar to what we saw in Tesla. As the company started to become profitable, their stock price literally exploded. And it's possible that you can see something like that once the company becomes profitable in about 2 to 3 years. But personally, if I wanted to invest in this company, I would have to wait at least another 2 years to invest in the company so I'm more clear about how profitable the company is going to be, which can help me judge what's a good price to pay for the stock. But overall, I hope this video was helpful. Make sure to drop a like and subscribe down below. It really helps out a lot. And let me know down in the comments what are your thoughts on Draftkings stock. Are you in favor of investing in the stock right now, or would you prefer to wait to invest in the stock for another 2 years? Let me know what are your thoughts down in the comments below. It would really help out a lot.